Hello and welcome to KYC, a brand new show at NDTV Profit. And in this fast-paced world of stock markets, investors bombarded with information, but what they often lack is a deep, comprehensive understanding of the companies they invest in. KYC, Know Your Company, is a show designed to give you regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. And today, we have in focus Route Mobile. Now, it's been through a lot of volatility of late, but let me start by telling you about what the company does. The company is actually into cloud communications platforms and, well, actually provides services around there. It caters to enterprise, OTT players, as well as mobile network operators. If you are familiar with a business-oriented, SMS that you get, at some point in time or the other in this process, Route Mobile would potentially be a part of this process, be it an SMS that you receive from a website, or for that matter, when it comes to a transaction that you're carrying out. The company provides messaging, voice, as well as email, along with SMS and analytics monetization solutions. And the company is also now a part of Belgium-based Proximus Group. And this has happened very recently, in fact, back in just May of 2024. And in terms of the revenue contribution, it gets a majority of its revenues from overseas, well over 80%. And the balance, of course, comes from India at the moment. But let's shift focus and talk about the fundamentals of the company and how things have panned out, in fact, so far. So what we usually tend to do with all companies in KYC is that we actually try and address them and take a handful of parameters and rate the companies in terms of whether or not it's a thumbs up or a thumbs down. So we consider the income statement, the balance sheet, cash flow statement, along with return ratios, among other parameters. We also consider how closely held it is in terms of shareholding, street credentials in terms of its performance, the kind of coverage it has on the street, as well as the valuations picture. And to take us through some of these aspects, I also have with me my colleague Rucha, who's going to help us decipher this company forward. So Rucha, welcome and thank you for joining in. Let's start by talking about the revenue growth and the profitability that the company's shown over the past few years.
Right, Agam. So, Route Mobile is largely, as you mentioned, into the communication space and, provides communications platform and regulates various SMS messaging, etc. But let's talk about the revenue. It receives majority of its revenue from outside India, that is 83% from overseas and 70% from India. But let's talk about the FY24 financial performance. Revenue was at around 4,000 crore rupees, a slight above 4,000 crore. But if we look at a 3-year CAGR, as we can see on our screens, it's up around 26%. Moving on to operating profitability, 5 and 4, which amounts to around 13% of its revenue. So the margins are at 13%, but operating profit also saw a healthy compounded annual growth rate at about 21%. And lastly, profitability, good CAGR over here, 32%, clocking around 390 crore rupees.
So, I would reckon it's a thumbs up when it comes to the income statement. There's no doubt about that. The kind of revenues that we've seen in terms of growth, as well as its profitability. With that said, let's also take a look at the balance sheet. And in general, it's a pretty strong balance sheet as well. Now, the company does have a debt of around 500 odd crores, but it has net cash of around 1,000 odd crores. This was the end of 2024, September 2024. Pardon me, it has a cash reserves of around 1,000 crores, which means that on a net basis, it's pretty much in the green. It has, no debt, in fact. So, and in fact, it has, excess cash reserves at the moment. So, sitting comfortably there. So, as far as that particular aspect is concerned, it's once again a thumbs up. But let's talk about cash flows from operations, Rucha.
As you rightly mentioned, Agam, this is the cash-rich company. As we can see, they have net cash actually, and cash flow from operations has also been healthy, around 73 crore rupees in FY23. But a slight bit of disappointment over here, 98 crore in negative for FY24. So neutral rating is what we have given in terms of cash flow.
All right, so a neutral for cash flows, but let's talk about the return potentials then and see how things, return ratios then and how things have panned out there. And we are essentially considering, your return on capital employed, which stands at around 21%, which is not bad because the general thumb rule is that a number over 20 to 25% is certainly a good one to have when it comes to ROCE. Even if you consider the cash flows from operations to EBITDA, that stands at around 58%. So again, another strong, parameter here as far as the company is concerned. So it's going to be a thumbs up for return ratios too. But how about the shareholding, especially after Proximus has bought over the company?
Proximus bought over the company in May 24 by acquiring majority from the promoters here. So free float is largely being very less in the company at around 25% as on September 24, while Proximus, which is the only promoter, holds around 75% over here. So this is the kind of less bit of free float and therefore promoter holding majority of the stake.
All right, so there you have it. That's how shareholding's panning out. I'm going to talk about the street credentials, and at the moment when it comes to the last 6 months performance, well, it's not giving you the best of returns. In fact, it's declined by around 8.5%. And the reason why this may be disappointing, because we've actually seen the broader markets do very well in the last 6 months, and that's the same case for the last 12 months as well. So if you consider the Nifty mid-cap index or the small-cap indices, they've all given you positive returns which are very strong, and in fact which have beaten the Nifty 50 by a mile. And as against that, Route Mobile has in fact underperformed. And in terms of the dividend payout as well, it's not considerably high, but that's understandable because it's in its growth phase. So I won't mention too much about the dividend play. As far as street credentials are concerned, it's currently on a weak footing. Not ruling out further gains, but for now, certainly not adding up here, so which is why it's going to be a thumbs down here. But is the street positive in general, Surucha?
Definitely, Agam. Only 5 analysts on the street covers this stock, and all of these 5 have a buy rating, as we can see, none hold and none sell. Therefore, since there is no sell or hold over here, if you look at the consensus target price, that implies a return potential of about 30%. So very good thumbs up in terms of street coverage with a bullish call on Route Mobile. But Agam, let's move on to valuation, which is one of the major aspects which we look at when we evaluate a company. Route Mobile is slightly higher valued at around 23%, and therefore it is 23 times, and therefore it is expensive. When we compare this with Tanla, which is a direct competitor, it is around 15 times its FY25 PE. So thumbs down in terms of valuation, but definitely up in terms of street coverage.
All right, so there you have it. Well, as far as the peer comparison is concerned, it does seem like it's a little bit more expensive than its closest peer, Tanla. But let's do an entire roundup of how the ratings all add up. So we've had a bunch of thumbs ups, at least a couple thumbs down. So as far as the income statement is concerned, well, largely up for the income statement and the balance sheet, along with return ratios looking pretty good. Cash flows are neutral. And we have shareholding and street coverage, which is certainly thumbs up. But as far as street credentials are concerned, the valuation is concerned, well, not so much, which is why those two are thumbs down. Where does this bring the total to? Well, a total of 5 out of 8. Now, this is, of course, on the back of 1 point for every thumbs up and half a point for a neutral, and we gave no points, though no negatives either, for when it comes to a thumbs down. So we have a 5 out of 8 as far as Route Mobile is concerned, but it would, I reckon, be pertinent to talk about strengths and weaknesses of the company as well, and of course, I can hand it over to Rucha when it comes to opportunities and threats. In terms of strengths, well, company has a diversified portfolio in terms of the services that it offers, and it does have a significant international footprint, which is always good. It doesn't depend on just one market. And in terms of the weaknesses, again, we're looking at large dependence on the telecom industry and very low free float market capitalization, though it could be a double-edged sword in this case, so wouldn't necessarily only point it as a weakness. But what about opportunities and threats, Rucha?
growing cloud opportunities is one of the biggest factors in this bucket is what I feel, because even after the US elections, many clients are actually increasing and accommodating more expenditure, and since majority of the revenue comes from international business, this is a real big thumbs up for the company, and therefore definitely a big opportunity for them. Also, since penetration in India is about at 16 to 17%, they can have more opportunities over here, and since other than Tanla, there is no such direct competitor, there can be more opportunities in terms of penetration in India. So this is about opportunities. But talking about threats, as you rightly mentioned, international business is always a good thing for a company, but when it comes to regulations and laws, that can possess as a great threat. So any change in international laws can be one of the great threats. Similarly, in case of domestic change in regulations, such as change in privacy policy, etc., because Tanla sends SMS messaging, uses WhatsApp, etc. So over there, the privacy concerns can raise a red flag to the company. And lastly, there can be threats from rising frauds as well, because of course there are so many frauds coming up with respect to SMS, etc. So that is the thing which can possess as a threat to the company.
Well, it's certainly something that needs to be watched out for. But Rucha, on that note, thanking you for joining us and taking us through the various aspects with respect to Route Mobile, the potential threats and opportunities as well. And of course, we'll be keeping an eye on that. But let's also shift focus to what the management is suggesting with respect to what lies in store. Now, as the custom, we'll talk. In fact, we've spoken to the management earlier, and well, they were largely sanguine about the environment in general. In fact, we spoke to Rajiv Gupta, he's the managing director, and Gautam Badalia, he's the CEO, who laid out what could drive growth in the coming years. Listen into a part of that conversation.
First of all, let me just give a little bit. What is Proximus Global is all about. First of all, Proximus Global is now having three entities, which is Telesign, Route Mobile, and BICS. Before, I think we were just talking about Route Mobile and Telesign to be a combined entity, but now we have finally taken a call that BICS should be also part of this story. So Proximus Global, as a three entity, we are now almost $2 billion in terms of our revenue, operating from 48 countries and with 2,500 people. And what we get a value to our customer, the kind of offering we have as a one entity is humongous. I think Route Mobile and Telesign, we always focused on enterprise side of the business, but BICS coming to this story now, we also have the telco side of the business, which is a very large in terms of BICS presence. And that is a kind of opportunity we see that our cross-sell and upsell opportunity amongst the teams are going to be big. And Route Mobile is definitely going to get better advantage in terms of customer acquisition plus cross-sell opportunities.
All right. Gautam, so come in on this. At least for the second quarter, we've seen growth of around 10%. And the question really is that with the kind of double-digit growth that you're seeing, first is, are you going to be able to sustain this double-digit growth? And secondly, if so, what are the parameters, what are the factors, in what areas will this growth come through?
Yeah, first of all, good afternoon, and thank you for having us on the show. I think last H1, I think we demonstrated almost a double-digit growth rate, 12% kind of a growth rate, and considering H1 is slightly muted as compared to H2 because of the festivities around, H2, should pan out better than H1, and hence, we will definitely be able to do better than what we did in H1 in terms of the double-digit growth that we're talking about. And then a lot of this growth, I think, will be kind of at the backdrop of some of the synergies that have already started to trickle in. In terms of some large deal wins, and then now with the Proximus Global kind of integration, we kind of become a fully integrated player. Covering the entire value chain. So this should augur really well. From kind of chasing large ticket opportunities globally, and we believe, I think, some of these opportunities. We have bid for some of these opportunities right now. If some of them fructify, they really add to the growth leg.
All right, Rajiv, about half of your revenues come from abroad, and the balance of course is India. The question is that now that you guys are part of Proximus, can this particular equation change, firstly? And also a follow-up to that is that, well, what are the other markets that could potentially open up for you all now?
So as we mentioned in past also, US and Europe is always a missing piece in our entire story as a Route Mobile. And the idea of this partnership with the Proximus is also to have access to the customer base out of this market. And with Proximus Global coming together and BICS also being a part of this, I think we will have a better access to the customer base in the developed market. And that will definitely going to create, and I think most of the developed market customers are looking out for termination in emerging countries. And Route Mobile being the champion of emerging countries will definitely get advantage of this partnership. And we will also going to see revenue growth as well as margin growth coming from this kind of understanding.
All right. And Gautam, are you witnessing a change in the requirements from your clients now in terms of what potentially could be in demand maybe a year to 2 years ago, and what potentially could look like perhaps a couple of years down the line?
Sure. So maybe I'll take a step back. So last year, H2, we faced a little bit of headwinds. If you remember, there was one particular platform where they talked about almost 5% of the traffic coming onto the platform, which were fake traffic. And since then, all the large global enterprises have started introspecting their traffic, and there was a little bit of a trust deficit, so to say, and that pretty much saved off about 5% of the industry growth. And today, most of these large global players are willing to work with partners where they have direct connectivity with the telcos. They are kind of largely proponents of white routes, essentially kind of curbing the gray routes completely in terms of spam, curbing spam and phishing traffic altogether. And that's where, Proximus Global plus Route Mobile, we have been a big proponent of kind of pushing this legitimate traffic. And we already are connected with 450 plus networks globally. So, we have all the recipe to kind of drive a lot of the trust from large global enterprises into throughput through our platform. So I think that should really augur well. On top of that, what is also kind of now evolving in a big way is the conversational element for any communication, right? If you're doing a transaction, so a lot of things are moving to omni-channel construct, and that's where having an integrated play where you have a play with your omni-channel CPaaS, you can power that with the infrastructure layer of BICS, and also kind of have a security wrapper around it with the digital identity solution of TeleSign. So that makes it as comprehensive as possible, and then we thrive on the entire trust element with the telcos because we are directly connected with them. So we can kind of envisage this as a big opportunity. As we stand today, we are among the top 5 large global CPaaS players already in terms of the scale of operations, and the endeavor will be to kind of grow faster than the industry and kind of drive the leadership to our advantage.
So Rajdeep, come in on the point that Gautam just made about growing faster than the industry. And by that, I mean that do you think that the subsequent years could potentially see even better than about 10 to 12% growth that you guys are already doing? I reckon that second half of this financial year will already be better than the first half. But what is a ballpark number that could look like, say, for example, for FY26, FY27?
So I think if you remember, I think we have given a guidance that we want to achieve a $1 billion revenue in 3 years down the line. I think that is an aspiration we still carry as a team, and we are working towards that. With this kind of a large partnership, the kind of value Proximus Global can bring to Route Mobile. And I think the kind of deals we are right now, which is there in our pipeline, will definitely lead to this vision of ours to become a $1 billion revenue company in 3 to 4 years down the line.
Right. Gautam, what kind of partnerships are you now seeking? What kind of deals are you conversing around as far as Route Mobile is concerned now?
So in the past, I think we've already kind of made it public. We kind of entered into a long-term deal. Proximus entered into a long-term deal with Microsoft, with Infosys, where we had a bilateral kind of a commit on the digital transaction piece. Where Route Mobile tends to be also a beneficiary. Likewise, there are similar opportunities with system integrators, CRM players, and some of them we have already bid for. If some of them were to kind of rectify, even with the 20-25% wallet size, that can kind of power almost a 10% plus growth for us annually. So, these are the kind of opportunities that we're talking about.
Right. Also, I want an idea on the margins as well, Gautam. With the kind of deals that you guys are signing up right now, could you give us an outlook on the picture in terms of margins?
Yeah, so I mean, as we speak today, I mean, there is a lot of related party transactions also kind of transpiring between various, related party companies, and that typically is kind of a little bit of a drag on the gross or the direct margins. So I mean, what we maintain is, I mean, we'll continue to maintain that 21-22% direct margin or gross margin. And on the EBITDA front, I think we kind of maintain the 30% kind of an EBITDA margin guidance that we've given.
Right. Rajdeep, are you seeking to raise funds with the kind of plans that you already have, even in terms of the investments that you are earmarking when it comes to the growth of the company? In what areas do you think that these funds could go to, at least given the next couple of quarters to a year?
No, there's no plan else yet. We are not raising any fund, and we're not in a plan to do so because the company is generating enough cash for growth. So there's no plan as such.
And to follow up with that, Rajdeep, with the cash that's already being generated right now, I'm sure that after the dividend payout, it'll once again be plowed back into the business. Will it be mostly the areas that you have already been putting it back into?
So yes, if you see, there are lots of innovation and R&D Route Mobile is doing from last 3 to 4 years down the line. There are some areas where we really want to invest, especially in the UCaaS and CCaaS solution, along with the telco APIs. I think that is a Kamara initiative is very, very critical for us to focus on. So we already have an initiative for this new development and R&D, which we already started. And I think the team has already started working on that.
All right. A final word then on Gautam on in general, in terms of the direction, where do you think that with respect to the client profile is the company moving towards? And I know that you've spoken briefly about all the plans that and all the deals that you signed recently, but if you could give us a better idea of the client profile that Route Mobile could be with maybe 2 years down the line.
Yeah, so that's a very pertinent query. I mean, and that also is a kind of link to the GTM strategy that we are kind of working on. So there is largely a 2 or 3 pronged digital GTM strategy that we're working on. One is kind of driving the regional leadership. So I mean, kind of getting our platforms integrated with a lot of BFSI companies, retail, aviation, e-commerce companies, quick commerce companies. I mean, so that is where we have now kind of a fully oiled regional team to kind of chase some of those opportunities across the emerging markets. We're trying to kind of build a similar kind of a construct into developed markets as well. Then comes to the large global strategic opportunities. I mean, that's where, I mean, the Proximus leadership team, I mean, the Proximus global team, I mean, they will kind of be kind of front running. I mean, so a lot of those opportunities and the benefits of that, I mean, would accrue to Route Mobile, I mean, from a CPaaS standpoint. And the third would be, I mean, the partnership approach, essentially working with a lot of these partners like the Infosys of the world, CRM players, various large CRM players, where we could kind of power their platforms through our communication leg and thereby reduce our sales cycle.
Well, there you have it. That's the manager of Route Mobile telling us about what's in store. But that is all that we have for this edition of KYC. Stay tuned for more news and updates. You're watching NDTV Profit.